Welcome back to the channel. Bet you didn't expect to see me so soon, huh? Well, we're back. And we're having a video today because today is a pretty interesting day. There's a lot going on in the market. The Fed is coming out with an announcement tomorrow. So I want to give you some information on what the Fed's doing, how that impacts the market, what we could expect to see because of it. Then we're going to do some analysis on the Bitcoin chart. We're going to look at the daily, the 4-hour, and the hourly. Each of those timeframes are showing us some pretty interesting things. So we're going to take a look at them and try to decipher what exactly is happening and how the Fed stuff may impact the market and just, because whatever happens to Bitcoin is really going to fall over to the rest of the crypto market. So we want to know what's going to happen. The next thing we're going to look at is EGLD, and we're going to do a very brief overview of EGLD because EGLD is following Bitcoin very closely right now. So it's almost more important to look at what's happening with EGLD, look at what's happening with Bitcoin. So we're going to take a look at all that. Make sure in the meantime, you subscribe, you follow me on Twitter. Links are in the description. Check out my website as well. My NFTs on Elrond are on there. And also you can scroll down to the bottom and see links to all my latest YouTube videos whenever they come out. So pretty much, if you don't want to go to YouTube sometimes, you could just go to my website, see the latest video and hit play from there. So check it out, use it as you please and let me know what you think of the NFTs. And let's get started. This is going to be fun. So we'll try to keep it short. I'm hoping 10 minutes. We'll try. All right, let's do this. Let's go over to this view. Switch over to that and we'll go to this view. So the first thing we're looking at is this article here. It says Treasury yields inch up with Fed meeting and geopolitical tensions in focus. I'm not going to read everything, just a very important part, and then I'll explain it to you. It says here that the Fed's two-day meeting kicks off Tuesday, which is today, with a policy decision scheduled for 2 p.m. Eastern on Wednesday, which is tomorrow. The central bank is not expected to raise interest rates following the January meeting, with many investors expecting the first rate hike to be announced in March. So a lot of people are assuming the Fed is going to give us an idea of what they're going to be doing over the next few months, basically in Q1 and what's going to happen in Q2. So that's kind of what the market's been reacting to lately. They have been reacting to what the Fed might do. Not even what the Fed has announced, what the Fed is going to do, just what the Fed might do. The entire market has sold off because of that. And it's really, really weird. People have just started getting off of these risky assets. To be honest with you, I don't think that's entirely what's happening. I think a lot of what's happening is hedge funds and Wall Street are selling off and taking profits, putting a lot of fear into the market because, to be honest with you, it doesn't make too much sense to sell off based on what, when you have no idea of what's even happening, and we've sold off so much that we're now equivalently as oversold as the March 2020 crash when a pandemic shut down the entire country. So it doesn't really make sense for us to be this oversold right now, which tells me that there's other stuff going on in the background. More than likely, you're having a lot of big players taking a lot of profits, and those are going to be the same players that are going to be buying back at these lower levels. That's what I think, because if any one of us was in that position managing hundreds of millions of dollars, billions of dollars, a good time to sell off would be right before the Fed may be bringing a lot of fear into the market, oversell the market, take a lot of profits, and then buy back lower. That's what they do. So I could definitely see that being a possibility, and it could explain a lot of why we've seen liquidity fly out of the stock market and fly out of Bitcoin. So the next 24 hours are going to be pretty important because the question really is, have we priced in way too much? And is the Fed not going to be moving as fast as the market thinks? Because if that's the case, everything is going to go back up. And is the Fed going to, the other option is the Fed going to actually make things a lot tighter, a lot faster than people think? Well, then maybe everything's not priced in. We could see some more downside. So the Fed information tomorrow is going to be important. Keep in mind, that's going to impact a lot of volatility we see between today and tomorrow. Do a little bit more reading on it to find out more about it. But, this is pretty much the overview of what's going to happen. One thing to remember is when interest rates are being manipulated, that's really going to impact the market. And that's what the Fed's doing. Are they going to increase rates? Are they going to decrease rates? People see rate increases coming. The more rate increases that happen, the worse that is for the market. Well, why is that? Interest rates are basically the cost of debt, right? That's what interest rates are. They are the amount of money that you pay to borrow money. That's your cost of debt. Now, the funny thing is, if you're artificially taking interest rates and putting them at zero, you're incentivizing borrowing. You're incentivizing people to borrow because the cost of borrowing is a lot less. They're paying a lot less interest. Think about it this way. If you borrow money at 0% or 1% or even 2% and you invest that money and make a 4% return, well, you're already better off because you're only paying 2%. You've made it 2% net. So put that into perspective and you realize why low interest rates equals a lot of borrowing equals a lot of asset prices rising. That's what we've been seeing. Now the Fed, but the Fed did this at a time when the economy was like shut down. So what happens when you incentivize people to borrow money and spend money, but goods and services prices are all going up or the economy shut down? Well, you're creating massive inflation by doing that. That's why we've seen prices go up. And we've seen everyone's cost of living go up. The funny thing is, even if the Fed can do anything good about inflation and start bringing those numbers down, the cost of goods and services is not going to go down. Like once those prices go up, no one's going to reduce their prices just because inflation is less. They're going to keep the prices high and the consumer is stuck with those high prices forever. So it's really, really bad. You do not want inflation long term. It causes a lot of instability. Now what we're seeing is that they're artificially increasing the rates, right? So they're decentivizing borrowing. When they decentivize borrowing, they're incentivizing saving. When they incentivize saving, you're going to expect a lot less people to invest because now it's going to cost more to borrow money. If the cost of debt is going to go up at a time when they're also taking away the money that they've been putting in the market, they've been pumping billions of dollars into the market every month. If they start reducing that and increasing the rates, it's basically a signal for the market to sell off. They could end up doing it too quickly and causing a recession. A lot of people are pricing these things in and freaking out. That's why you're seeing so much volatility, everything being down. It's because of everything that's happening with the Fed. That's really what's causing it. You know, Bitcoin, in my opinion, is massively undervalued. It should not be. Right now, if it was 120K, I would think that that's a closer valuation to what it's worth. This is just crazy. So, okay, that's what's going on with the Fed. Now you understand that. Let's go ahead and move on because we're running low on time. We've already looked at pretty much everything that we need to cover with this. So let's go back to the chart. Now, when we look at the Bitcoin chart, what we are seeing here on the Bitcoin chart is quite interesting. Okay, we're basically seeing that the price has been stuck beneath this 20 exponential moving average on the 4-hour for quite some time. I want you to understand how this moving average works. If we look at the longer term picture, right, when we hit our all-time highs, when we were in bull phases, we were always above the 20 exponential moving average. You see us above this blue moving average. We used it as support. Then when we started dropping, we get resistance on it. We come back up. Anytime we're moving up, it turns into support. When we're moving down, it turns into resistance. Well, now this entire way, it's been resistance. We've had a few instances where they've been fake outs where we've kind of gone above it. But overall, we have been in a massive downtrend. Well, with this latest drop, we got so oversold that the 20 exponential moving average moved really, really low. We had a number of death crosses. And now basically what you're seeing on the 4-hour chart is that we've broken back above that 20 exponential. Way too early to tell. Are we flipping it? Are we going to move back up? Way too early to tell. Is it going to be something just like this where we flip it short term, ride it for a while and fall back down? It's a possibility. So right now, everything is undecided. These patterns look really good. This looks like a good uptrend. It looks like a somewhat sustained uptrend because we've started a new support trend line on the way up, which is kind of like this. All right, this is a good thing to see. You want to see those new patterns and new trends forming. Holding this is going to be important. You don't necessarily want to break below that. So we'll keep an eye on these things. But what I really want you to keep in mind is that right now on this time frame, on the 4-hour, we are looking at 38K as a resistance. We are looking at 37K or 36,300 as a support. That means we have a pretty wide range where we could trade. And seeing the price get constricted on this 4-hour time frame between these two moving averages before it moves up is very possible. So what does that mean, right? That means you could see the orange moving average kind of go like this. You could see the 20 exponential moving average kind of go like this. And you could see the price start getting constricted here until it has a move down or a move up. So keep that in mind. That's what I'm looking at. I'm looking at 38K as a pretty solid resistance ahead of us. If we were to break above it rapidly, that's going to be pretty interesting, and it's going to have to change what we are considering to happen in the short term. The other thing that's interesting on the 4-hour time frame is that we have broken back above the 45 level. This is a pretty bullish sign. Anytime we break above this 45 level, the next key thing to see is, are we going to get support on it? If we get support on it, that's a good sign as well. But once again, nothing confirmed on this time frame until we really know, are we getting more support on this? I think the first step for us to really know, are we moving in the right direction, is for us to get above 44K. This was our prior top in the last consolidation over early January. So we have to break above that to set a higher high and really cement that we are not in this downtrend anymore. You see that downtrend? We need to break above this level here. this 44,000 level right there to kind of break above that. So keep that in mind. Very, very unconfirmed. This is a very interesting time. It's a great accumulation time in my opinion, but I'm not taking the potential of downside out of here. I still think even 28K to 32K are feasible if we lose this 33,000 max pain support area. If we lose that, definitely possible we break into anywhere from 28 to 32K. So keep that in mind until we have confirmations. Now let's look at the daily to see really what kind of confirmations we need. Okay, when you look at the daily, you see the same thing with the 20 exponential moving average. When we're bullish, we use it as support. When we're bearish, we use it as resistance. This entire way, it's been resistance on the way down. Once again, we see on this, these two levels make a lot of sense. Step 1 is 44K, breaking above this. Step 2 is 52K, breaking above this. If you were to see a break above these levels, it would look something like this. It would look like us moving in that direction. This would flip the 20 exponential moving average into support. This would also allow us to break our two prior tops on the way down throughout January. So that'll be a very good indication that we are now setting in higher highs and moving back to the upside. It's going to be some time until this is confirmed, so keep that in mind. Now is not the time to go crazy. Now is the time to make smart, calculated decisions. Okay, the other thing that's interesting on the daily time frame is that we are now finally seeing that the RSI is not as oversold as it's been. It's been insanely oversold, down all the way to the 19.79 level. Now it is back up to around 32, which is still oversold, but not massively, not as much as it was, but it's still definitely oversold. Now we take a look at the 1 hour time frame, okay? Let's go to the 1 hour. So this is where we see something really interesting. What I want you to understand real quick are continuation patterns, all right? Continuation patterns are quite simple. When you're moving in a direction, like this is a downward direction here, when you start putting in a symmetrical triangle, the continuation usually moves to the downside. So let's zoom in and see what I'm talking about. So you'll see here that we put in a symmetrical triangle like this, okay? So you go from the tops and then you take this to the bottoms. We actually need to adjust this. This was actually a little bit like this, and it would have gone out a little bit further. So this would have been kind of like the symmetrical pattern that you would have drawn. I mean, adjust it a little bit, but that's roughly what you would have drawn. Now, what you expect when you're coming from a downtrend into a symmetrical triangle, you're going to expect to drop further. It's a continuation of the original trend. This is your original trend here, right? That's your original trend, and this is the continuation playing out. This here, this triangle, is your continuation pattern or symmetrical triangle. Now, these work both ways. They can give you a continuation to the upside or to the downside. Now, we got to look at what's going on right now. If we look at the hourly chart right now, well, we have two things. Very interesting. We have a prior downtrend, right? And if you look at the continuation pattern for that, it was right here, right? This was the continuation pattern. All right, so it was basically like this. And what happened from that continuation pattern? Well, it continued the downtrend. We fell even further. We had a downtrend, a continuation pattern, and the continuation. That's what we saw. Well, now what do we have? We have an uptrend, and we have another symmetrical triangle forming that we are actually already breaking out of as we're speaking, which is kind of funny. So we'll take a look at the symmetrical triangle first. This symmetrical triangle looks something like this. Okay, now if we look at this triangle, I wouldn't have actually expected a major move until sometime tomorrow, likely, like sometime in January 26th. This actually, to be honest with you, I would have made this longer. If the uptrend hadn't already happened, I would have basically made this look like this. You know, let's make this slightly more accurate. I would have hit those tops a lot closer. It would have looked like this, and it would have taken this continuation pattern into January 6th, which is tomorrow after the Fed announcement, which would have made a lot of sense. The fact that we're breaking out now is telling me that we're actually, the market's starting to realize how undervalued Bitcoin has been, and now we're having that breakout. The other interesting thing here is that I would expect that the price would drop and either bounce off of this triangle or that it would come back into the triangle. What that means is that we're looking at the possibility of going back down to 36,800 or as low as 36K to continue this pattern, if that's going to happen. I would expect volatility as a possibility, so it could definitely happen. Keep an eye on it. I wouldn't even be surprised if we keep breaking out, but if we do keep breaking out, we have the 200 exponential moving average providing resistance at 38K. So on the way up, I would expect resistance at 38K, and then I would not be shocked if we came back down to this level. Keep in mind, usually on uptrends, even on the daily, you start to see that you're getting support on that 20 exponential moving average. Well, the 20 exponential moving average right now is only 36,300. So when we break out, we could have a downtrend like this one again and come back and touch that 20 exponential moving average. If that moving average moves like this, well, it could mean touching 38K and then coming back down to there. So keep that in mind. I'm looking at this as objectively as possible. And right now, I don't think we have any confirmation. And I think what's happening with the Fed is going to have a lot to do with what's going to happen next. And because of that, we're going to see a lot of volatility going into tomorrow because prices are so good everywhere right now. Keep that in mind. All right, that's pretty much the main things that I'm seeing on the chart, right? Right now, my upside targets really, in order for me to see what is going to happen next, lie on the daily, right? This is where I'm really, really looking at my upside targets. And the first one I want to see us break is 44K. Everyone else will say 40K. That's really important. That's a psychological level. 40K, it is important, but what's more important is that we break above 44K, because if we hit 40K and we break above it, it doesn't really mean much because we're still putting in a lower low, right? I want to see a higher high. If I want to see, like, we're putting in a lower high if we do that. Sorry, if we hit 40K, right? If we go here, right, and we hit 40,000, well, then we're putting in a lower high. Here's our last high. Here's our next high. So that's not good. What you want to see is us coming up and breaking above 44, because then we're putting in a higher high past that prior high. After that, we want to see us do the same thing with 52K. After we break above 52K, then we should be having a lot of golden crosses on the daily chart. We should also be starting to hug the 20 exponential moving average on the way up. RSI should work its way back above 45. That's what I want to see until I see this thing confirmed. Until then, all possibilities are open. My orders are going to be set as low as 28 to 30,000, just a few of them for my DCA orders, and I will be looking to make purchases anywhere between 33 and 36,000 if we fall back below that or into that area. All right, that's pretty much it, you guys. I think that's everything. I hope this gave you a good amount of information. I'm sorry it was 17 minutes. I was hoping this would be a lot shorter. We're going to look very, very briefly now at EGLD. I just wanted to show you something. So what I've done here with EGLD is I have taken this Fibonacci retracement and extended it all the way back to a super long time frame from the bottom here to the top here. Now, what happens when you look at this is that we have a golden pocket that long-term does not have a lot of volume. It was our top here. It was our top here. It was a support here, and it was a trading channel here. What's really the most important thing with EGLD right now, as Bitcoin starts its recovery and all that stuff, is for us to break in to the 195 to 215 or $210 range. That's our golden pocket area. I want to see us break into that. And just to give you exactly, yeah, it's from 195 to 212. So we want to break into that area, and we're likely going to see some resistance there when we work our way back up. It's at a pretty key point because with this new regression channel I've put in, we see two things. One, that we got support right on this regression channel. Next, that the regression channel top actually meets the golden pocket right here. So if by early February, like February 7th, we have a big uptrend and recovery, we're likely going to get resistance in the golden pocket at this area, at this, regression channel, at that regression channel. So keep that in mind. That's what I'm looking at short term. Overall, we're following Bitcoin. So there's not a lot going to be going on with the Elrond chart unless you start to see Bitcoin recover or you see some new news come out from Elrond or Holoride or something like that that drums up a lot of interest regardless of what's happening with Bitcoin. So until we see something like that, I would just expect, well, my strategy with Elrond is just to continue accumulating as I can, because in my opinion, not financial advice, in my opinion, I think it's very, very undervalued. And I think it's going to be going back up to the, 300s, 400s, 500s and beyond in the next, 6 months to a year, depending on how this market plays out. It could happen in a couple of months, but I feel like this is going to be a longer cycle than people think. I think we're going to have a lot of sideways trading for Bitcoin, and I think Bitcoin's slowly going to inch its way up until certain catalysts happen that really cause big bounces, like finding out that, like if we find out that Turkey has started adopting Bitcoin as legal tender, or Argentina or Brazil, any of these other countries, or more institutions come out and say, we've allocated Bitcoin to our balance sheets. those kind of things, or transaction counts and hash rate just start going up. As the fundamentals start shifting, I think we're going to see massive moves. But until then, the market's really deciding what's happening, and EGLD, as a result, is dealing with it just like the rest of the markets. I think right now, Ethereum's undervalued. I think EGLD's undervalued. Cardano's really undervalued. Polkadot's undervalued. Celsius is massively undervalued. Matic is undervalued. Theta is undervalued. GRT, Mana, like ZIL. There's so many tokens that are undervalued right now that we're going to see money start flowing and liquidity flowing. And I think a lot of it's going to be dependent on what happens with Bitcoin. All right, that's 20 minutes, 10 minutes longer than I wanted to do, but still about half the time as our normal videos. I hope you enjoyed this update. I hope it gave you some information going into tomorrow. I'll try to do a few more videos this week as more news comes out, because I think we're going to be seeing a lot of volatility this week. So make sure that you're subscribed, and make sure you turn on your notifications so you get those videos as they come out. Make sure you check out my website, links in the description. You'll see my YouTube videos. If you scroll down to the bottom, you can also check out my NFTs. And check me out on Twitter. Make sure you follow. Some of the people on Twitter that aren't following or that aren't subscribed on YouTube yet, do it. We got like 16,000 followers on Twitter now, which is crazy, by the way. Thank you for that. And we need to see some more of those people start coming into the YouTube channel. More people join, more visibility will come. And honestly, the more time I'll be able to allocate to these videos, because they'll bring in more ad revenue. So make sure you check things out. And I will talk to you guys soon. Thanks for joining me. Peace out.